Bada boom. Are we live?
Yes.
Well, you did not say that. All right. What's up, everybody? Welcome to the Investing Bros. Thought that was another test. Guys, CPI data coming in higher than expected. And a lot of people freaking out right now. But what should you be doing with your crypto holdings if you are thinking about selling as prices are crashing? Make sure you watch this entire video first, because we got a lot to break down about what these high CPI data numbers actually mean. We are the Investing Bros. Let's get it, T-Shirt. What it do, boys? Long time no see. Thank you for that amazing intro, T-Shroom. I had no idea we were live. How are you guys doing today? Got Caleb Franzen on the show, got T-Shroom. What's going on with you guys?
Better than I deserve, Tim. How are you, Caleb?
Doing good, guys. Doing great. Always looking forward to these. I had to run some errands today around Bucharest, but everything got handled. We're good to go. So
Here we go.
let's talk these markets, baby.
Very
All
cool.
right. Before we get going, chat, I want you to put into chat who Caleb Franzen reminds you of. Is there a celebrity with that long hair and that nice goatee going? Is there a cartoon character? Drop the greatest Caleb Franzen lookalike in chat. We're going to be getting going into some big conversations. Of course, it is Caleb Franzen Wednesdays. We always love our Caleb Franzen Wednesdays, and we could not have picked a better day to make it a Caleb Franzen Wednesday, because today people are freaking out. Really quick, we're not going to do the coin market cap open today, T-Shirt. I'm going to go to the chart real quick, share my screen. Let's just talk about Bitcoin for a second here. Not going to get into Lux Algo, not going to get anything. Bitcoin, after breaking out 2 days ago, making everyone believe we were going to go bullish, it turns out that was a little bit of a fake out. We've come back down, corrected. In fact, we've actually done pretty darn close to what I showed our members a couple of days ago. I said, these are the two plays right here, guys. Either this is a fake out and we drop back down below and retest this red line as resistance, and then we have potential short opportunity, or we find support and bounce the upside. Well, that red line is proving to be very, very crucial. But at the end of the day, let's just kind of zoom out and look at this. If I did not know that there was any bad news today, this is just sideways action on Bitcoin. It's actually still setting us higher lows at the moment. Versus you come over and you take a look at altcoins, nothing but lower highs, lower lows. Solana getting close to that 160 we predicted as the bare minimum for this pullback. I think lower levels are coming. But as a whole, let's just go ahead and get right into it, get on the ground with Caleb. What is going on in the world right now when it comes to inflation numbers? Did they surprise you? Let's break those down and start the discussion. What does this mean for crypto holders moving forward?
Yeah, I think some aspects surprised me. I think the magnitude of the acceleration definitely caught me by surprise, and caught the market by surprise, plain and simple, right? Because estimates, I think, we're looking for 3.4%. And we came in slightly above that, 3.47% on a year-over-year basis. That's up from 3.16% in February. So that's a notable acceleration, right? And I think the big thing that we're really kind of seeing under the hood is really what's taking place in headline CPI ex shelter. T-Shroom, if you want to show my screen on this, this is the data right here. Headline CPI excluding shelter inflation. Why am I excluding shelter? It's the largest and the laggiest data point that we have in the CPI data. So by taking it out, it's really giving us a good picture of what's happening in the rest of the CPI components, right? I'm not saying that this is the actual inflation rate for US consumers. Definitely not the argument that I'm trying to make, but I'm using this as a directional indication of where inflation is going, right? So when we really look at this chart, we could see it bottomed. It stopped decelerating in June of last year, and it's been reaccelerating to the upside. And this is a bit of a concern for the Fed, because what it essentially indicates is that the lag component, or the lag aspect of shelter, is what's really been, the largest contributor to what we've been seeing over the past few months. But if with everything else continuing to accelerate higher, that's why we've seen some of the stickier data so far in 2024, which is a very stark contrast versus the disinflation, the decelerating environment that we were seeing in 2023. So as we do think about market implications for this, right? First and foremost, in 2023, one of the things that I was saying, due to my disinflationary thesis, is that disinflation was going to be a bullish catalyst for the equity markets and risk assets more broadly speaking. So Bitcoin, crypto, the whole 9 yards. And we got that follow through. Last year was a banner year for all assets, right? It was a really strong year across the board. So as we think now about the potential for inflation to reaccelerate, wouldn't the opposite be the case, right? And I'm not here to be a bear because I don't feel bearish today, especially with the price action that we've been seeing in today's session. One of my mentors taught me this. When the market doesn't react poorly to bad data, that's a really good sign. Like when we really think about it, a lot of stocks bottomed in June of 2022 when we got the CPI data that was a massive beat to the upside. We had record inflation on that print. But the market rallied on that day, and a lot of stocks bottomed in the middle of 2022 on that exact day. And so today, when we're seeing a similar dynamic where inflation is coming in much harder than expected, we're seeing it reaccelerate, but asset prices are bidding since the open, something doesn't quite line up there, right? And so I don't want to dismiss the fact that we're seeing asset prices, which, as we've talked about more recently on this show, prices are a forward-looking indicator. They're a forward-looking pricing mechanism. I don't want to discount the signal that the market is telling us because I don't want to pretend to be smarter than the market.
Yeah, I will say one thing. Can you share your screen again and go to that Fed chart?
Sure.
There's something I was looking at timeline. I always love to see the dates of when these things are moving, right? So we're looking at this Fed chart, but take a look at where the last big bottom was. Look at the date that was at, and then take a look at that period. Of course, we're talking about 2020, guys. Where we see early 2020, right there around COVID, we bottom out, and then it's nothing but upward action. Well, what also happened after COVID? That was nothing but almost upward action. That was crypto. And so even this right here, I think it is something I think what Caleb's trying to get at is this is an alarming chart when it comes to actually how we're spending things, right? So people having to go buy goods every single day, this is not fun. Price go up. But this is the first part. I want to get into the conversation. I would love for chat to give their take as well. T-Shroom, Caleb, want to hear your thoughts. But when I heard this news today, it was very easy for people to get somewhat negative. But in reality, I think that this actually could potentially be one of the biggest bullish catalysts for Bitcoin and other cryptos that have utility / worth capabilities, meaning that's a great place to put your net worth into. Is this big for meme coins? Maybe not. Maybe meme coins are not the ones that get big wins on this. But when it comes to some of those top altcoins that we have been talking about for a very long time, namely though Bitcoin store of value, inflation going up and the US dollar getting obliterated due to inflation. We've seen it historically, again, just like they were back in 2020 into 2022, be very, very bullish for crypto. I think that it is going to amplify the recent words of Larry Fink when he says that Bitcoin is a flight to quality. I think people loved hearing that when he said it here a couple of months ago. But now, how often are we probably going to see that? And how true is that going to ring in the ears of people who have wealth, who want to protect it and see, man, despite the fact that we haven't lowered interest rates, inflation is still going to make a move back to the upside. We need to get out of this crap currency as fast as possible and go to somewhere that actually has quality. That's exactly what Bitcoin and the top cryptos represent. T-Shroom, Caleb, I'll start with you, T-Shroom, then we'll go to Caleb. What says you about that? What are your thoughts about what's happening this morning via the U.S. dollar and inflation?
Yeah, well, Tim, I think you both have presented some really valuable insights. I mean, the facts on the ground are, inflation is sticky. It's sticky right here. You can see, we got up to 9.1 in reaction to the supply chain issues and how that was affecting everything, and then the Fed turned quantitative tightening into turbo mode, right? Or, at least that's what the messaging was from the media, and inflation played along and came to the downside. Still sticky, though, not getting to that 2% target rate that keeps your dollars getting 2% less valuable every year. Now it's 3.5% less valuable every year, right? Or at least that's the average for right now. Now, I think that the Fed has a lot of work to do to get their head around how to message from here. I think I'm kind of in agreement with Caleb and a lot of other level-headed economists here that are looking at this economy and saying, how could the Fed cut? It's just, it would help the banks. It would help. There would be a lot of winners, right? There would be a decent amount of losers, right? But ultimately, cutting here is just opening the door to inflation going higher, and I just can't see them doing that. What effect does that have on risk assets? Categorically, it has a downward pressure on risk assets. However, we're still seeing them get bought. And to Caleb's point, I can't agree anymore, is that we're seeing optimism in times of peril, in times of uncertainty. And I just hope that's here to stay. We are seeing the indexes to the downside. 1% here for the NASDAQ, looks like 1.1. The Dow Jones 1.4, right? That's not a huge sell-off, though. It's to the downside, but it's not a huge sell-off. It's not 3% in the major indexes that you might imagine if you're just scrolling through Bloomberg or CNBC with the looks of desolation on the faces of shoppers and things like this. Guys, it's all going to be okay, and this could be the moment where Bitcoin emerges as that flight to quality, as Larry Fink put it. So that's kind of what I'm clocking here. But until this blue line is down here on this yellow line, the Fed has its work cut out for it, and I expect results, and so does the market.
Yeah, I'm going to throw it to Caleb here. Share my screen here real quick, though. If you guys are wondering, is there any hope still of a rate cut coming soon? Guys, when Joe Biden throws in the towel on rate cuts, that's when we're not getting any rate cuts anytime soon. He's saying today rising inflation reports may delay interest rate cuts. What that means is, crap, y'all, I'm going to lose the presidency. In another way, I want to throw a question to Caleb now. When it comes to, man, I had it a second ago and I derailed my thought. When it comes to the priced in argument, you've been on the show before and you've said that you did not believe that the big rallies we've seen in crypto recently were pricing in the expectation that we were going to start cutting rates, right? However, there are a lot of people who think that that's what was happening. A lot of people are looking at today's dip and saying, well, this could be because there were a amount of people who were investing with the expectation we would get a rate cut by at least May, if not sooner. And of course, with this delaying that, not seeing it, I want to hear your argument because I know you disagree with that, but do you not agree with the sentiment there where at least some people and even whales investing in risk on assets with the thought of, well, if we get these rate cuts, this is going to be a good play. If we don't get the rate cuts, I'm going to need to back off my holdings. What are your thoughts about that argument and what that is what the effective price is based off of those expectations?
It's a fair argument to be made because when we had the immediate reaction to the CPI data, everything sold off, right? So sure, maybe some investors, certainly a cohort of investors were expecting, I mean, in January, people were talking about, 2 cuts by May, right? And that we were going to have, 3 cuts before the middle of the year and all this kind of stuff, right? So we keep getting those pushed back. So certainly there's been a cohort of investors who have been expecting cuts to come sooner. But I think, again, when I look at the market on the aggregate, the majority of market participants, when I look at something like the Treasury market, have still been looking at Q3 now going into Q4, right? And that's why I've been getting that information specifically to kind of guide my outlook and my perspectives. There was one thing that I actually wanted to highlight here. Let's go to my screen really quick, if you don't mind, T-Shroom. Again, this is the same chart that we were just looking at that I was sharing before, which was headline CPI X shelter. And so I've highlighted several areas here where we saw notable increases in this data point. One thing I also want to highlight, guys, is where we're at right now at 2.3% year over year. You're going to notice we're in the midpoint of the historic range going back over the last 30 years, right? So when we do look at non-shelter components within the CPI, basically everything else except for shelter, they have an inflation rate that's historically normal, right? So I think that's very, very important. But again, I want to highlight these areas here that are accelerating because Tim, man, you just spurred a really interesting idea that I had. I wanted to go through and see how did the NASDAQ composite index perform during those periods where the blue line, which is that headline CPI X shelter, was accelerating. So we could see here, late 90s, we have the NASDAQ composite really going up. If we look at post the dot-com bubble, again, in 2002, we see this start to catch up, moving up together with headline CPI X shelter. Same thing happens after the great financial crisis. Same thing happens right after COVID. So, Tim, it's an interesting point. I think the one thing that we would need for this to actually be somewhat of a bullish catalyst in some ways is we can't have inflation get out of control again, right? We can't get back
Yeah.
to the levels that we had,
Yeah.
right? Because back here during these periods, these were higher than normal inflationary periods, but they weren't historically high. You know what I mean? So I think that's a very key dynamic here. And, again, maybe there's something to think about with this is basically so long as inflation doesn't get out of control again, maybe we shouldn't be as scared about a potential acceleration as we might have initially thought this morning.
I completely agree, and I want to spend a lot of time here. We have some other breaking news happening today, and there's a lot of stories to talk about. But this is the big stuff, and I wanted to make sure we had this conversation. I hope you're watching this. If you're thinking the way I'm about to say, you might be thinking. I think there's a handful of people out there freaking out right now, asking the question: could this be the blow up to our economy that we've been expecting? There's people. The word stagflation has been thrown out, which I want to make sure people understand. Stagflation does not just mean inflation does not go down. To get stagflation, it's continual high inflation paired with high unemployment. Now, you can argue with the reality of the unemployment numbers by saying they're fixed and they're fake. I don't. It is what it is. From the numbers and data they give us, unemployment's relatively low, right? We are not in stagflation. And at the end of the day, I want to remind people there was a lot of talk about a year and a half ago, 2 years ago, saying that 4% was the new 2%, meaning if the Fed keeps saying they want to get down to 2%, what they mean is they want to get down to 4%. Let's just make sure we have this in perspective. We are under 4%. So let's just say we had the fake version of stagnation that you guys want to talk about, where inflation moves sideways. Effectively, I think as long as we stay below 4%, there really isn't necessarily anything bad going on if we trade sideways and an unemployment numbers stay where they currently are. Again, is there fake details in there somewhere you could try to mix with? Yes, you could. But I think there's an overwhelming amount of reaction today of people being super, super negative. And I'm not saying that we should get super positive and be like, this is good stuff. But I think people are very, very quickly turning from, hey, things are starting to slow off a bit, and then saying, oh, doomsday. We're going to come out of nowhere and say the economy's over, everything's about to blow up before the election time. Hide your kids, hide your wife, get in your bunker. The world's exploding. I think that's a little bit of an overreaction. But Caleb, what do you think about that? Do you agree that's an overreaction? Do you think there's reason for people to be freaking out? What's your thoughts?
Yeah, I mean, if people are okay, so first of all, stagnation or stagflation. We do not have stagflation. I see a very, very minimal risk of stagflation because stagflation. I mean, you touched on the unemployment aspect, which is very true, but it's also
higher inflation.
Complemented also, but with lower growth. And right now, we're seeing very strong growth numbers from a real GDP perspective. So stagflation for me right now is out of the question, especially with my expectation about resilient economic data. I am not a Keynesian by any means, but from the Fed's perspective, when they look at this reacceleration of inflation in the past few months, or some of the stickier aspects that we've been seeing in broader inflation measures, that to them, because they are Keynesian, means that they're more bullish on the economy and the strength of the US consumer and GDP growth, right? Because from the Fed's eyes, a Keynesian believes, let me make sure everyone is familiar with this, a Keynesian believes that growth and inflation are positively correlated, so that inflation is a consequence of higher growth. This is why the Fed hates deflation, is because they think deflation is the consequence of low or negative growth. And they don't want low and negative growth, therefore they don't want deflation, right? So I am not a Keynesian, but there are aspects of the Keynesian model that have a lot of merit. So I borrow some aspects and I don't borrow other aspects that I don't like. And so when we see this inflation data potentially reaccelerating, if anything, that should give us, in kind of a weird way, a more, Maynard Keynes, there he is. He had this amazing quote, in the long run, we're all dead. So he did not care about long run economics because we're all screwed anyways. Some economic policy when it doesn't matter in the long run, right? My goodness. So I got totally sidetracked there. Sorry, guys. So look, I think from an economic standpoint, things continue to look fantastic. So I certainly would not be concerned about stagflation yet. unless we just see a notable decline in GDP growth. But we're not there yet.
Yeah, it's true.
Absolutely. Well, let's do this before we move on and do other topics, other news stories. Caleb, why don't you bust out some Bitcoin charts, maybe any other coin charts you have? What is your levels you're keeping an eye on? I mean, not that we're going to talk about crazy bearish levels. I'm going to hold to my levels. Everybody might know these if you have been watching. I still think there's a 50-50 chance that we hold 60K. We don't go below 60K. That means there's a 50% chance we do go lower. I've kind of put my lowest level around 48K. Even after all the data has come out today, I'm going to keep my same numbers. To me, this news did not change anything. I told you guys I thought Bitcoin was trading sideways, and I thought altcoins were going to go a little further downside with Bitcoin dominance going to the upside. But you guys have heard that opinion. You'll hear more of that opinion tomorrow. Caleb, what say you on these charts? What's your range of expectation and probabilities when you're looking at Bitcoin and the rest of the crypto space?
Look, I'm still very bullish. What we're trading at like 69,500 right now, maybe a little bit higher, a little lower. I'm not quite sure off the top of my head. I'm sharing my screen here, looking at the short-term holder realized price. Right now, that's trading almost at 59K. So for me, it's a very low probability, but not something I'll dismiss, that we could get just below 60,000 and maybe retest that short-term holder realized price. My expectation, if we do get that type of consolidation, is that we would rebound on that level. So I want to make that very clear. As we zoom in on more of the shorter term price action, looking at Bitcoin with 1 hour candles, this was a level that I was focused on this morning, this rising trend line coming in here. And you can see we wicked right off of that level. If we get rid of these, what I want to do actually is go in, we'll be pretty degen here. We'll just look at this with 10-minute candles. When we have the breakdown below this pivot, right? Why is this pivot so important? We get this massive decline from basically 73,000 all the way down to 68K. And that's where we stopped falling, right? Yesterday afternoon. And so when we bid back here into this range, I didn't outline this blue level until just this morning. But when we break down below that level, this is what people call something like a scoop and score. Basically, you get this invalidation, it's a failed breakdown move, and we're able to break back above that level. So for me, getting back above basically 68,200 this morning was a potential risk on signal. And we've seen a lot of continuation since then. I did a video on Twitter this morning saying, for me, the next thing is I need to see some sort of development of higher highs, right? Clearly, throughout this range, we've been making lower highs, right? We can all see this, and also lower lows, right? And so now what we need to see is the next step of that, which is to make higher highs. And so for me, that next pivot is right here in this range, right here in this range, right here. How can we get above this level? You could see we tried. We couldn't get a 10-minute close above this range, but maybe this is some kind of like sick and twisted cup and handle. I don't know, right? But I feel like we're kind of basing here at the very least, which looks constructive from my perspective. Let's get that follow through. Let's get the breakout, right? And so this is a key word that I've really been using a lot lately, is constructive price dynamics. And when we talk about something being constructive, it doesn't mean it's bullish yet. It means it's trending towards being bullish. And so what we need to see now, and the thing that I've been waiting for, is outright bullish behavior back in this market environment. I don't feel like we're seeing that yet with Bitcoin. I was really pleased to see Ethereum doing really well yesterday and the day before, and maybe for the few days before that even. I felt like ETH BTC was making a little bit of a comeback off of those lows. That for me was a very encouraging sign. Solana holding up. A lot of these other alts and so on and so forth were doing quite well. But we need to see outright bullish behavior, and not just for 12 hours. We need to see this now really come back in for 3, 4, 5 days, a week plus, and then get another maybe slight consolidation that really gives us conviction to step in more with a bit of size, right? So I've been really flexible in this market, getting in and out of stuff. Thankfully, I've been in a couple of winners like ALCX and Arrow have done extremely well for me, but I've been taking profits off that all week. So, I've been very happy with that and raising cash. So I was able to reallocate a little bit this morning, thankfully. But again, sometimes it's better to be lucky than to be right.
Cool. Very good stuff there, Caleb. Now we got a couple of engagement messages we're going to read here. We have super chat, but I got to give the winner to Chris Maycock. Called it perfectly. This is what I was looking for. He said, that guy looks like Orlando Bloom. I think that is. I think it's going to be hard to find a better comparison than Orlando. A good young Orlando Bloom over here breaking down the Bitcoin charts for you. We got a super chat from Morgan Powell, and I think this is a great question right here. Hello, bros. In which crypto do you see better multiples this run? Dot or Render? Always enjoy the show. Thank you. This is a very good question, Morgan. Thank you for the super chat. Thank you for the question. I'm going to ask you guys as well. I'm going to set the stage though, and give you guys something. I think you have to give the edge to Render, right? I'm going to start off by saying that you have to give the edge to Render. Why? Because Render currently has a $3 billion market cap versus Polkadot is already up to almost a $12 billion market cap, right? So we can get if Polkadot doesn't even move, Render has to do a 4x just to catch up and be at the same playing field, right? So you'll get more money out of Render, but I'm going to change the question. Which one will have a higher market cap, Polkadot or Render? And I'm going to say, in my personal opinion, I think we're talking about Polkadot, the number one interoperability coin. And then you have Render, which arguably will become the number one AI token. It's not currently. It's got some stiff competition, but I have some high hope in Render. Which coin? You'll make more money in Render probably, but which coin will have a higher market cap at the end of the bull market? T-Shroom and Caleb, the interoperability or the AI?
Yeah,
I
think it'd be difficult to form an argument that Render won't perform better from a multiple standpoint during the bull market than Dot. But I think that Dot remains a higher market cap than Render through the entirety of the bull market, just because Dot has proven that it not only is a major solution to interoperability, but it's also innovating. It's one of the top coins that's always on the top of the list of new development starts and things like that. So I think it's here to stay, and I think that Render, while it's still very valuable, it to me hasn't proven itself to be as entrenched, as integral as something like Dot. But that could very well change in this this bull market coming through.
Good, that's a good take there. What do you think, Caleb?
So I think Render has two things working for it that have been concrete and super clear. First of all, it's a relatively new cycle coin. I think it basically came out at the very tail end of the bull market last cycle or at the beginning of the bear market. So we all know new cycle coins are typically going to lead because they have a faster and easier path to get into price discovery, and you don't have long-term holders who are constantly selling into upward pressure. The second thing is Render has been a narrative token this cycle as well, with the whole AI theme taking place, right? And so again, so much of crypto is narrative based, narrative driven. And so in that kind of market environment, you want to be aligned as much as possible with the leading narratives of each market cycle, which can evolve, right? And one of the things, one of the phrases that I've loved is one of the defining characteristics of a bull market is rotation. So you like when I learned that thinking about the stock market, it's, you rotate through different sectors, different industries, you have different investment themes in the stock market showing leadership within a bull market, right? We get breadth expansion, new sectors participate to the upside. The thing that I kind of have on my mind is, do we see a rotation out of AI? And I feel like to answer that question and to say we will see a rotation out of AI is so mid-curve. And you don't want a mid-curve in a bull market. You want a left curve. The trend is your friend. The narrative is your friend. You want to be aligned with it. So, T-Shroom, if you wouldn't mind going to my screen on this really quick. When I was on the show last week, one of the setups that we talked about was Render, because we were retesting the Smart Trail indicator from Lux ALGO signals and overlays. So I thought this looked really good, and we were seeing some follow through here. And I didn't sell out of my position. I'm still holding it today. I think the good news that we're seeing right now, I'm going to kind of play devil's advocate to myself. The good news is we're still holding the line on the Smart Trail. So we kind of wicked below it a little bit today, but we haven't closed below it, obviously. The thing that's giving me some concern is, for the first time, just on Thursday of last week, right? So after our show last week, we actually had the trend tracer here flip to orange, which is a bearish signal, right? And we can look back here at this last bearish signal for the trend tracer and say, well, that clearly didn't invalidate a potential new uptrend. So I don't want to let it invalidate us right now, but maybe it's a little bit of like a yellow light, right? Or a little bit of a sign of caution. And certainly if we get a breakdown below the Smart Trail here, I think that would be a pretty clear signal that this might be due for a little bit more of a consolidation, because I mean, man, back in November, I was trading this thing in the twos, right? And I rode this initial breakout move here. This was fantastic. And I was selling into this. If I didn't sell into this, I would have rode it from 250 when I purchased it all the way up to 13 and a half, right? So this thing has been a massive compounder. And so if you just want a left curve stuff, this is the trend to be playing.
Yeah.
Yeah.
I love it. And when Caleb refers to mid curve and left curve and right curve, right, this is what's being compared to it. And in some sense this is very like degenerate, but in another sense it's actually extremely truthful. And this goes for there's truth here in a lot of things in life. But when you're in a bull market for crypto, it is dictated by a 4-year halving cycle that so far has proven to be true each time. And so one of the biggest mistakes you can make is to screw it up and have user error. Right now you have the wind in your sails. And so what you want to do is listen to plenty of smart people, right? You might even think that you're listening to some smart people right now. But what you want to do is just realize that this is okay to be on the left side of the curve. Don't be in the mid curve, overthinking things, over sweating, getting crazy, right? That is more... that will be much more appropriate. Hard work and effort will be much more appropriate in trying to figure out when the bull market's over. But luckily, that is not a problem we're faced with at present. So I absolutely love it, and that's super good. We reference this. This is the path to altcoin season, and we reference this pretty often here on the 3 p.m. show. This just kind of shows, we're starting with the Bitcoin phase, then you get into the Ethereum phase where, Ethereum starts to outperform Bitcoin, and that margin grows. And then phase 3 is the large caps, right, where Ethereum has been outperforming Bitcoin and large caps are going parabolic, right? We haven't seen that yet, so we are definitely not in phase 3. And we talk about this a lot, so we won't belabor this, but my opinion is that we're somewhere right in here, and that's kind of my opinion. You can take a screenshot of this and look at it later for those of you who are interested in trying to play those rotation.
Do you guys think that we're going to kind of stay in that extended Bitcoin focus for some time, right? Like these ETFs, I hate to say it, but like it literally is different this time, right? So like how much of do we stay in that first phase for much longer? Like that's certainly been the case, but I think like how much longer do you guys see we might stay in that kind of environment?
I think we will stay in some form of that. That's a good point there. But let's remember, a lot of the altcoin season is based off of people taking profits from Bitcoin and moving into altcoins as well. So while we have all of these new institutional players that are going to probably stay in Bitcoin / I'm just preparing everybody. Watch the Bitcoin layer 2s. Again, a lot of them that we're going to get major gains in aren't even out and available to buy just yet. We're going to keep watching that the rest of this cycle. But I don't think the old's going to go away. I don't think that concept of people saying, man, I'm up. I just turned my $50,000 into $100,000 on Bitcoin. Let me take that $50,000 profit and go throw it into some of these other altcoins that have better gains in them. Because when the going gets good and people start making money, we just wired this way. This is why a lot of people struggle with gambling. There's always that, how can I make more money? I just doubled my money. How do I triple my money? How do I quadruple my money? And they're going to realize very fast, Bitcoin's slow and painful, and it's compared to the rest of cryptos. It's actually still very good compared to the stock market, but they're going to see these other coins going 2x in one day. They're like, all right, I just made a bunch of money in Bitcoin. I just made a bunch of money in Ethereum. Let's go find these other coins that have bigger gains happening and make even more money in them. That's been the cycle in the past. I don't think that cycle is going anywhere. I think that's going to continue in some degree, one way or the other.
Yeah, I think it depends on if we start to see major, kind of black swan liquidity events that folks like, Peter Schiff and others like Robert Kiyosaki have been calling for decades. If we have something like that, I think that Bitcoin and gold, and to some degree real estate and bonds as well, they step up to the plate, and it's kind of a reset, right? What is going to be the currency of value going into the future? And short of an event like that, I think that we probably see exactly what Tim was saying is you do have quite a bit of domination in the beginning of the bull market by Bitcoin, but then sooner rather than later in those phases, people get enticed by other coins. And
Yeah.
I don't think
T-shirt.
that that's a bad thing, but that's that's decentralization of investment, right? Is people, they make the gains in
Yeah.
Bitcoin, and then they go make more gains in whatever it is, Cardano. I've got Polkadot pulled up here. There's all kinds of different opportunities that aren't that risky compared to Ethereum, compared to Solana, Bitcoin, and these types of things. So I think that we probably still see a semblance of that rotation out of Bitcoin and into altcoins at some point in this bull market, but it certainly will be different. It certainly won't fit that cycle definition to a T. But one thing I will point out is that this cycle, it's not like a chart, right? These are words. This is natural language that we can use to identify the different phases. So that is an important key. Is there's going to be quite a bit of subjectivity, but that's why these types of channels exist, right? Is to try and parse it out and call it, right?
And
Predict it.
T-Shirm, I think you said something there that I want to make sure people hear it. You didn't say these words, but what you said led to this type of thought. What did you talk about? You said Bitcoin's going to go up. You said gold's going to go up. You're going to see commodities, real estate, other things go up.
For sure.
Guess what is happening right now and is the hottest section of crypto and will continue to be hot for these reasons? Real world assets.
Oh, okay.
Real world assets. So we're talking about, look at the chain links, the AVAXs, and then the specific coins that are tied to real estate, that are tied to goods and services, that are tied to different things. Real world assets. If you guys walk away from this part of the show without taking away one thing, take away RWA, real world assets, are going to be huge because of what T-Shirm's talking about right there. Before we move on, I wanted to give one take. I'm going to make videos. I have not made a price prediction video for either Polkadot or Render. I will in the next couple of weeks, but I'm going to give you guys a little tidbit of my prediction when it comes to market cap. Again, I think Render makes more money from here on out, but I think that Polkadot, we're talking about a project that gets somewhere between $150 to $200 billion in market cap. Could it surprise me and go a little higher? It could, but that's where I'm going to give it for now. I think Render's more in the 100 to 150 billion. So we might even see both of them be around that 150 mark. But of course, yeah, you'd make more money in Render than you would Polkadot if that happens. Mm-hmm. So little tidbit for you right there. Great super chat, Morgan Powell. If you guys give super chats, maybe we'll give a nice 10-minute rant on your topic here as well.
And Morgan had a follow-up question about RC20 tokens. Look, you might want to do some more research on that to try to prove me wrong, but you can get Render on so many different exchanges. I don't think you need to be getting into some exotic rail like RC20 to be getting Render. You should be able to get that on just Solana blockchain. It shouldn't be super complicated to get Render. Would be my input there. Well, Tim, we've got some stories here. Are we ready to go ahead and transition? Caleb,
yes.
Did you have any bows that you wanted to wrap on anything we discussed here?
Blackie Chan is a good question. I'm going to ask it, and then let's decide if we want to answer it now. If it's going to take more than like a minute to answer, let's move on and come back to it. If it's a 5-minute answer, let's go back. I have a question for Caleb. Do you think that Bitcoin proves that Keynesian economics doesn't work by proving any supply of money is sufficient to run any economy because it's infinitely divisible? Is that a yes or no answer, or is it complicated, Caleb?
That's
I don't mean to be disrespectful, but I don't necessarily understand the question with respect to it being infinitely divisible. So, Blackie Chan, if you want to DM me on Twitter, I'm more than happy to set some time aside and we could chat about it.
Yeah. Let's go ahead and get into the news here, guys. Brought to you by iTrust Capital, an excellent way to preserve your crypto gains through this bull market in a tax advantage account. That's iTrust Capital. We trust iTrust, and so should you. The first one here, key inflation data was leaked to BlackRock and JP Morgan by the Bureau of Labor Statistics. Obviously not as an organization, probably someone internal, not the whole organization, hopefully, allowing the traders to make market-moving bets. This is according to Bloomberg and the New York Times by way of Radar. The Twitter account, economists sent emails to select groups about rent and the used cars. An economist from the Bureau of Labor Statistics corresponded on data related to the key U.S. inflation gauge with major Wall Street firms like JP Morgan Chase and BlackRock, raising questions about equitable distribution of information, I would imagine, raising questions about equitable access to economic information. Yeah. So any thoughts, any opinions on this type of a phenomenon? Does it really matter because we just assume that this is going on Or is this egregious when it needs to stop?
Listen, T-Shroom, these are not the real bad guys. The real bad guys out there are Uniswaps and decentralized finance tools. They're going to ruin America. Let's allow two of the largest investment firms with the most amount of money in game to be able to make insider trading tips and not have big scrutiny from the SEC. Let's let that happen. But these Uniswaps and these DEXs, end them now. That's what I think, T-Shroom.
Absolutely. Well, Tim, of course, referring there, we'll just skip ahead to this headline. Watcher.guru reporting here, SEC to file lawsuit against Uniswap using a Wells notice to the company. Of course, Wells notice was the one handed over to Coinbase, and I believe that was the initiation of the SEC v Coinbase case that is ongoing and should be resulting here fairly soon. Caleb, do you need Uniswap under the ground? Do you feel attacked by Uniswap? Do you feel like they haven't communicated the risk well enough to the market? And do you need the SEC to step in and protect you from what how Uniswap could hurt you?
Oh man, yeah, I've been wronged by Uniswap so many times. No, I'm kidding. Yeah, this is interesting. I don't know. I don't get into the legal stuff, and I think that I ended up reading the founder of Uniswap's post on Twitter. I thought that was really excellent, so I would recommend people go check that out. And again, like I'm not a legal scholar by any stretch of the imagination. But I think I think you guys know, I generally lean towards being a bit of a Bitcoin maximalist in terms of being an investor. As a trader, I don't discriminate, so I'll get involved with anything.
Mm-hmm.
But I even feel like for the industry as a whole, this is like a must-win case. It just really does kind of feel like that. And so I think irrespective of if someone's a hardcore Bitcoiner and they completely avoid altcoins, like this is something I think we should all be rooting for Uniswap to get a victory on this, because
Absolutely.
again, everything that the SEC has been doing has been just outright confusing, and then clearly it feels not exploitative, but like they're specifically targeting the industry with like, it's crazy.
Arbitrary and capricious comes to mind.
There you go.
This isn't the defining moment, but this is a reminder in case any of you have not been thinking about this. The SEC is at war with decentralized currency, right? It lost to Bitcoin. There's nothing it can do about it. But all of the rest of the altcoins out there, it is at war. They've gone after Coinbase. They've gotten their butts handed to them. They've gone after Binance, but then the DOJ got involved. Things happened. The SEC did not get what they wanted when it came to Binance. They are going after anything and everything they can do to continue to fight against decentralized finance. And let me tell you why. It's because they think you are too stupid to make your own decisions. Let's just be honest. Let's not pretend that they're just like, oh, we can't have these regular people making money. That might be part of it, but ultimately, I'm actually going to give them the benefit of the doubt and say they're not trying to intentionally ruin your lives. They're doing it by control, saying these people are too stupid to make good decisions for themselves. We need to regulate them into oblivion. But it's one of those things that is like, when you look at these two articles back to back, T-Shirt, someone put it in chat, how is that not illegal? Like, how is it not illegal that I'm BlackRock or I'm JP Morgan, known historically for screwing over people and paying billions of dollars in fines because I do that, but I get inside information, and instead of reporting it to the SEC and saying, hey, someone's trying to give us inside information, I just utilize it, and the SEC doesn't seem to care about these things, or they're going to give them a very small slap on the wrist. Like, they probably used that information and gained $1 billion today. I'm throwing these numbers out of my butt, right? But let's just say they profited $1 billion today off that information. They're going to get fined like maybe $2 million, worth every single penny, right? There's no regulation there. But then you have things like Uniswap, and some degenerate clicks on the wrong link and loses a couple $1,000s and then cries about it. And we're saying, all right, let's go get rid of Uniswap, even though Uniswap didn't do anything wrong. It was user error, but their SEC is going to treat all of us like we are idiots. And their rule is, you need to become a financial advisor. We need to regulate every single coin you can invest in and not invest in because you're too stupid to know what's good for you, and we know what's good for you. This is the beginning of a desire for utopia, but ultimately full out communism, where you're not smart enough to make your own decisions. The government needs to make all your decisions for you. And decentralized currency is a threat to that thought process. So therefore, they need to do everything they can to get rid of it for the sake of thinking they're doing what's best for you. But obviously, we know the evils of that.
Interesting. Well, it could be. It absolutely could be. The way that I think that, I mean, we're kind of going back to this story here of BlackRock and the Bureau of Labor Statistics. Oftentimes, when these types of stories come out, what it is, it's a small department at the bureau communicating with a small department within BlackRock and J.P. Morgan. It's not the top C-suite, right? Trying to curry the email of the director of the Bureau of Labor Statistics. It's not the top guys ever, right? It's some corrupt department within each institution, and they're the ones, sending back and forth, unpublished public information, so to speak. But it just kind of goes to show that a lot of this stuff should just be on the blockchain. And you fast forward 10 years, it's hard to imagine a world where we're still operating and caring about what the Bureau of Labor Statistics is saying versus something that is run by Amazon and AI and blockchain, right? So that's kind of my feeling towards it. And, of course, you're going to expect that self-interested individuals are going to continue to try to profit off of the lag in technology. So there has been more breaking news here from Bitcoin Archive. Coinbase has integrated Apple Pay for Bitcoin and crypto purchases in the UK. Of course, this is just continued adoption for crypto. And, I must say, because Europe and the UK have been ahead of the game in regulatory clarity, it's likely that this is why Apple is able to go ahead with this. But getting a giant Fortune 500 company, the second largest company in the world, involved in Bitcoin and adoption, this is very bullish, even if it's only happening in a small country or a small cluster of countries where they have a very funny English accent. There you go. There's an insult for the for the English today. But we also have a factoid of the day. But did you guys have any thoughts here on this one?
We got to ask Caleb this. Caleb, you have been not everywhere in Europe, but a lot of places.
No. Yeah.
Here we go. Now, you might not want to answer it, but I know the people want you to answer this.
Okay.
You're gonna out one country. What country have you come across that has the funniest sounding accent in Europe, in your opinion?
Hungary. When I was in Budapest, the Hungarian language, first of all, is such a mind twist. It's super interesting. It was so hard to say things. I only learned a few things. So like to say hello is sia. So like sia. Which is kind of interesting, but it's sia. And then if you want to say cheers, like if you go out to drink, it's ege shege today. So that's how you say cheers. But the locals, they just say ege or something like this. So anyways, the Hungarian language is very complex, very interesting. I felt like I was really in a foreign place.
Cool. It's interesting you say that, because I haven't educated to the exact same conclusion, which is that if you look, these are the Indo-European languages that have come from Indo-European regions, believe it or not. And those include Indo-Iranian, so that's going to be Hindi, Bengali, Punjabi, and then on the European branch, you've got the Romantics, the Germanic, the Slavic, Russian, Spanish, Portuguese. We're learning something here on Investment Bros today. But then way over here, you've got this old forgotten brother of the Uralic languages, which include Finnish and Hungarian. These languages were, if I'm not mistaken, because of geography, they were developed in isolation of the rest of this tree of languages here. So, man, we're having some fun. We're getting into some factoids before we're even in the factoid.
We're not even
section.
in the factoid yet. Yeah, there we go.
Okay, really quick, before we go to the factoids, can you go to my screen really quick? We're getting some great action here out of Bitcoin. We were just talking about this range on my screen, right? Trying to break above that blue zone, because initially we were looking at it with 10-minute candles. We were right here.
Nice.
And so we're getting that nice explosive move above the range. So for me right now, I like to confirm these short-term market dynamics with 1 hour candles. So if we can get a 1 hour close above this blue level, 69,600, we're going to get that in 11 minutes. Right now we're trading just shy of 70K. This is a great sign, but you'll also notice, where are we coming into? The smart trail, right? So we need to break out of this as well. That's going to be very constructive. So I just wanted to highlight that. We're seeing good dynamics take place while we're on this call. So good news.
And what's crazy about that, just staying on the charts, is that the Dixie is having a pretty crazy bullish day today too.
Yep,
So it's not often that you see the Dixie and the Bitcoin moving to the upside on the same day, but today it's taken two to tango. So
well, that's actually what we've been seeing a lot in 2024. Not a perfect intraday correlation between the dollar and risk assets, but generally speaking, year to date, the dollar is up, the S&P 500 is up, the Nasdaq is up, Bitcoin way up, Ethereum way up, right? So some of that correlation is starting to weaken, right? And I think this is the key thing for people to understand is that the dollar and risk assets are inversely correlated, all else being equal. Everyone always forgets the all else being equal. So if we're in a vacuum where there's only one factor and it's the dollar, then yes, it's going to have an inverse relationship with asset prices. But we don't operate in a vacuum, right? There's all these confluence of factors that are influencing market dynamics every single day.
Cerebus pluribus, all things being equal. It's something we all learned in our Econ 101, but it is easy to forget. It is unfortunately easy to forget. Well, let's get to the factoid here, brought to you by iTrust Capital. Here we go. With a rough population of 60 million, what country is the third most populous member state of the European Union? Is it France, Poland, Italy, or Spain?
Oh, bro.
I'm gonna guess it's number 1 and number 2 on this list. So we probably have the top 4 here, and we're looking at which was third.
I'm definitely not answering that question.
I'm gonna say, oh man, I feel like Italy could be very heavily populated, but I feel like Spain and France might be more heavily populated. Do you think? Well, Caleb, we'll work on this together. Italy or Spain?
Yeah, let's team up. Okay,
which one do you think has more people?
It's not Poland.
It's not Poland.
I know. France, I think, has the second largest economy in Europe after Germany.
Okay.
So if we're just going by economic size, right? I'm guessing they're probably the second largest, most populous member state in the EU. So for me, I'm looking at Italy and Spain. And this, I have no idea.
It's like Italy is smaller, so you would think it had less people, but it of course has a couple cities that are very dense. But so does Spain and France. I think Italy. I think I'm gonna go with Italy here.
Okay.
But it could be.
I was gonna go with Spain.
I literally said, okay, you go there. One of us is gonna win here because I think Italy or Spain is my thought. So I'll go Italy, you Spain. We're gonna get a winner here.
Italy.
Damn, dude, and I'm Italian, bro. I'm a failure, dude.
So there you go. Absolutely. The third most populated and just under 60 million here. Italy, just under France and Germany. Deutschland, some may call it. And Spain coming in fourth.
Spain came in fourth. Okay.
Total population,
Look at Romania.
48 million. Yeah. So that was a factoid to remember.
Wait, go back to that real quick. That's a close. Go back. Look at how close. Oh, well, never mind. I thought there was both 50. Never mind. There's 10 million difference. Okay. I thought for a second it said 58 for both Italy and Spain. I'm like, are they like literally the same number? But it's a 10 million difference. Okay. Cool stuff. Cool stuff.
And for those of you at home, I think a couple of people noticed that I did have a tab up here because this is how Tim got it right yesterday. I did have a tab up here.
I'm not falling for that kind of crap.
But I had the wrong tab.
Just look at the tabs. You try to play some
and hey, listen. I did not pull a BlackRock or JP Morgan. I didn't say bacon. I have no idea how I got that right. I just did. Dude. I admitted to how I found the right answer. They didn't. Right. They cheated. So
no insider trading happening at the investing bros.
Nope.
No insider trading.
Zero. Less than
We're
0.
honest. We report the hacks.
That's right.
All right. Let's get into it, man. We got some time here. We're probably gonna end about 4:05. So we have about 10 minutes for Q&A. Q&A for Caleb, Q&A for T-Shroom, and me. We want to tell stories. We want to talk TA. Let me do some. While we're waiting on Q&A. I feel like pissing on the party. Let's just do this. Let's piss on the party. Share my chart. Share my chart here, T-Shroom. Remember, guys, I literally called this out. I said, look for a pullback somewhere down here in the middle, around 67. I missed it slightly. We had some wicks, but look at that. Look where the candle body closes here on the hourly chart. Where I put this line again, members. This is a chart I put in members only here on Monday. I said if we make a negative move, watch for a bounce somewhere down here, and a retracement back to the red resistance level, what is currently happening. And I'll say it here. He brought up Luxago. I love it. I love it. Guess what that is, guys? A smart trail concept. Now we're flashing a buy right here. So if we break this smart trail concept and we start to move to the upside, I want to see where we put that prediction. We have the red reversal coming up here towards 72,000. Could be very, very good, but money flow is positive and everything else. But when you move these larger time frames, it's not necessarily as bullish. MACD make a little turn right there. Money flow is going a little sideways. But daily chart, this is where I still am telling people, hey, be a little weary. The daily chart here gave us a bad buy signal, very bad buy signal, told us at a peak to buy. That just shows you the strength of the bears. The money flow sideways at best, but recently been more bearish. And the MACD is kind of slowly but surely moving to the upside here, but a lot of negativity coming in here. Again, I think Bitcoin's more of a sideways than downward motion. It's actually really, really bad when you start to get over to the altcoins of the world. Altcoins looking very, very. Solana making a bleed, just dropped below the daily 50. Did not bounce on it. I don't love that. Same thing here with Cardano, rejected at the 50 as a bounce back. We're hitting that daily take profit, but the money flow still negative. The MACD still negative. Daily charts not looking great right now. And we're still under a lot of sell orders. This is it. Luxago just called this stuff perfectly. But bringing it back over to Bitcoin, are we in a spot that's kind of a decision-making opportunity? Absolutely. If we get back above this yellow line, it takes away my case for bearish movement. But I think it's too early to ring any victory bells just yet until this smart show concept is defeated. Now look at that. Hey, we just upgraded to a 2 on the buy. That's a stronger order than a 1. I'm willing to be wrong. But let's watch what happens. We're not going to be live while this happens, but over the next 2-3 hours, can we get above the yellow line? Can we get above the smart trail concept? Can we turn it back into a blue support level and turn the whole trend bullish? That would be awesome. But I'm not ready to say that's definitely going to happen just yet. And I know people are going to say bearish, Tim, but it is what it is. And when I'm wrong, I'll say I'm wrong, but I've been pretty right about this pullback so far during its happening.
Tony Nasia said, ICP dying. I've got it pulled up here. No. Definitely wouldn't call it dying here, but we are breaking down on the daily chart back through the Bollinger Band, losing some key support there. But, this is one that I'm still undecided on the fundamentals of it. It looks strong kind of on the surface. And I think that this is going to get a nice bid through the bull market. So ICP, if you have zero exposure, like me, I actually have zero ICP. This might not be a bad time. This might not be a bad dip to try to pick some of that up as an investment. Is that financial advice? Absolutely not.
Good, Gil.
I took a trade position in ICP this morning after the CPI data on the bounce back. So I'm in that actively right now.
Nice.
I could get stopped out later today. I could be in it for 2 months. I have no idea. So we'll just kind of wait and see. Tim, I wanted to go over some of the stuff that you were going through right there because I think that was fantastic. If we go to my screen really quick, still looking at the Lux Algo. For me, guys, I really focus on just the smart trail and the trend tracer. For me, I just kind of like to reduce a little bit of the noise. And so when I do see the fact that we are using this upper bound of the smart trail, which is bearish, as resistance time and time again, that's a bit of a concern, right? We've been making these lower highs through here. You can maybe make the case that we try to make a higher high here, but again, we're getting rejected. The thing that we cannot ignore is the fact that despite the fact that we've had this bearish smart trail indicator, which is threatening and continuing to act as resistance, what have we been doing during that same exact time period? We've been making higher lows, right? This is fantastic price data. And we can see we've had these signals occur in the bear market already. This was not a good time in the market, August and September of last year. I did a post on Twitter on, I think it was on the sometime around here, and I was saying, if you're not buying Bitcoin on this dip, you're dead to me. And I got so much flack on Twitter for saying that, oh, you're just a cheerleader. I'm like, I'm looking at the data. We were retesting the 200-week moving average cloud at the time. And I was like, are you kidding me? How am I not going to back up the truck right here? I texted everybody I knew, buy some Bitcoin. So look, we could get another one of these types of breakouts, but look, we would be getting that breakout above 76,500. That would be fantastic. The other thing I wanted to mention here, just a final note, is we're seeing this action in Bitcoin, but what do we see in total 3? We're still holding above a bullish smart trail indicator. So as we look to assess recent market momentum, the case can be made certainly in 2024 that the short-term trend in altcoins has actually been stronger than the short-term trend in Bitcoin. From a statistical perspective, that is what the smart trail indicator is objectively telling us. And I don't think we can dismiss that fact, right? Because if the riskiest segment of crypto is still showing a bullish indicator on here, we flip that into support once again, we flipped it into support once again, we flipped it into support once again. That's not bearish, right? At the very least, right? Maybe it's not super bullish, but it's not bearish yet.
Absolutely. Bitcoin
Yeah, no,
get a bit more of a
absolutely.
bid here, up 1.3 now. So maybe we will get that breakthrough live, Tim. We'll see.
Yeah, we do. That'd be awesome. Again,
5 minutes, let's go.
it's not as much as I'm rooting against it as saying like I don't love it. And let me please don't use this analysis. Let's just do a section of the show where Tim vents
Sure.
and tells you about his trauma. Can we do that for a second?
Yeah.
I'm not saying this is going to happen, but every time during this Bitcoin cycle that a formation develops, I'm slowly but surely becoming a hater of formations in crypto. I'm talking head and shoulders, inverse head and shoulders, bullish symmetrical triangle patterns, bearish symmetrical triangle patterns, ascending triangles, descending triangles. They've not been playing out well, sometimes for our benefit, right? So we've actually had a lot of bearish formations in Bitcoin and Cardano and Solana that make you think that either something's about to break down or the reversal is going to come in, and then price breaks to the upside. And then you hit the bullish ones, and it's like, oh, this is a bullish formation, and then we get a steeper correction to the downside. So, like, here's what I want to point out. What Kale's talking about. Go to my screen here. I have a symmetrical triangle pattern kind of going here, but you could almost make some form of an argument to say we're kind of developing an ascending triangle. This is bullish. This is a very good formation. But I just told you I have this trauma right now with crypto that during this rally we have been doing the opposite. I mean, remember, guys, this is the biggest mistake that I've made this entire cycle, and I've admitted wholeheartedly to it. And for those of you who did not listen to me during this circumstance, good, because I got it wrong. And I missed out on an opportunity to make probably, an extra $5,000 or so. We developed a really nice looking head and shoulders pattern going on over here that should have taken us to the downside. You guys remember this way back here in October? This is when, we saw the FOMO, we saw the fake news of the ETS and all this stuff. And I was like, guys, it's just the smoke and mirrors, price going down. Well, it didn't, right? So this was the big sign right at the top of the bat. We have a bearish formation come in and we do the opposite. We have massive blows to the upside. But then you start to see we had, a very nice distribution phase going on right in here. There's no bullish formation right in here. If anything, when you get this kind of sideways and then one more good peak, this is a great excuse to move to the downside. And then boom, we go up again, right? So let me tell you, the bullish part of it was right up to here, and then we lost it, bearish, and then it goes outside. So all this formation was a fake out, and then we're coming back up here. We get a bullish formation going on. There is a little bit of me that says, all right, the times I've gotten things wrong here recently have been when I take formations and I make the prediction based off of normal technical analysis formations. It's almost like, again, with the institutional adoption in here, they know that people are looking at these patterns thinking that's bullish, that's bearish, that's bullish, that's bearish. And they have enough control to manipulate the market to the other direction. So could we get a breakup to the upside? Absolutely. We definitely could. But there are still some signs of negativity. And to me, when Caleb says, look at these higher lows, this ascending triangle, I'm like, yes, that's a bullish formation. That means we're going to crash because that's what we've been doing this whole time. It's very concerning to me. So Tim's therapy is over. You guys have heard me. Thank you for listening to that rant.
Absolutely. I've got a chart here. I covered it this morning. It's the Caspa chart, and I made an observation I want to get you guys' take. Caspa, by the way, rallying 4% to the upside right now. It might even be one of the bigger movers in the top 100. But hey, take a look at this. If you take a look at Caspa, I mean, first of all, it's finding some nicer support. It's got a nice little uptrending line of support starting to form now. First tap was back April 3rd. Before that, April 18th. Now we're trading a good bit above that, but that could provide some support going forward. But the real magic comes down on the Lux Algo Oscillator Matrix, what is this, like the 9th time we've talked Lux Algo? We can't shut up about it. It's so great. Take a look here. The last time that the money flow, this is the daily chart, came back into this line of note here, the last time was right back here. And what was that? What was happening there? A big rally. It was a little bit of a lagging indicator there, the money flow, but it was a rally that led into consolidation and then a continued push higher. So from a CASPA standpoint, we are seeing the same thing happen. Money flow getting back down into that line of note and moving in a positive direction. Tim, Caleb, what do you guys think here? Taking a step back, zooming out on CASPA, is the oscillator maybe predicting some big upside here for CASPA, the proof of work chain?
T-Shroom, you're killing it here. Look at this indicator. Go to my screen. You gave 2 examples. Let's go further back. Look at this right here. What happened here? Excessive selling, excessive sellers, money flow goes positive, boom, price goes up. Now we get up here. Excessive buyers. Those buyers leave. What happens? Price goes down. Excessive sellers, they leave. Price goes up. Every single time. CASPA is a perfect example of this indicator. When you get the excessive buyers or sellers, that's really strong, but that means the reversal's coming soon, and that reversal could be sharp. And that's a great call right there, T-Shroom. Look at that. Those excessive sellers are gone. We crossed back above. If I zoom this in, we just crossed back above the bearish threshold. I'm not saying go mortgage your house and put all of it on CASPA for a long. But if you got a couple nickels and you want to go long on something, I like that daily CASPA chart. It's a way better daily CASPA chart. The CASPA daily chart's looking way better in a bullish formation than almost anything else I've looked at over the last week or so at this point. So great call there, T-Shroom. What is your thoughts, Caleb?
I have a question for you guys. When you're using that indicator, I haven't messed around with that one too much myself. I've really just been focused on the signals and overlays. Yep. Are you guys using that with the default settings or?
Yeah.
Okay.
Nope.
Cool.
I haven't edited this one from default one bit.
And so the signal that you're looking for there is basically a divergence in those 2 indicators on that oscillator, correct?
Here, I'll go to my screen here real quick. This is the oscillator. I'm just going to show you. So, like, this is when I actually made a video that you could somewhat trade using this oscillator and not even watching price action. I love nice. For entries, I love seeing what I call the trifecta. So this, for anyone who's considering purchasing a Lux Algo, this is one of my most lethal tools that I use for my trades. If I get a trifecta of bearishness, meaning a reversal call, either a dot, a triangle, or a bearish divergence. If I get a bearish momentum dot, which is the gray dot, and negative money flow, right? So I would not have entered a short right here because the money flow is still positive. I would have entered right here, though, when the went negative, right? So money flow negative, reversals negative, momentum's negative, I sell. Vice versa, I get a bullish reversal, bullish momentum, money flow goes positive. I wouldn't have entered a long right here because we're still negative in the money flow. But as soon as we go positive, that's when I enter. But then the other part of that is if you get this highlighted section, right? So this is the money flow here, green, red. This is all negative money flow, positive money flow, negative money flow, so on and so forth. The highlighted section is excessive buyers or sellers. So if it's green, it's excessive buyers, red, excessive sellers. It's very, very strong when they're in there. But notice there's not a single time where you have excessive buyers or sellers that the drop-off isn't very, very quick. And as we just showed, every single time I see the highlighted red and then it drops to 0, long takes off. And again, that's what we just looked at. Every time I see the buyers leave the space, big sell down. So this is one, I recommend using the other tools as well, and I recommend using your own analysis. But theoretically speaking, I bet you could make some money. I'm not going to say that all the money in the world, but you would be positive in your trades if you didn't even look at price action and you just watched this oscillator.
Museum of Corruption said, thanks for the RSG trade, Caleb. Riding the dragon.
Ooh. Republic Services, trash management. You know the
right.
famous Ray Dalio quote, cash is trash. I say trash is cash, baby.
Ew.
I love it. That's great. Speaking of which, if you guys are loving the alpha here, you're going to absolutely love the guest links here. They're the first links in the description of this video. This is to Caleb's Twitter account, formerly known as X, and his Substack, where you can get down in the nitty-gritty of Caleb's thoughts and views and insights on the economy. Of course, now that we're moving into the Federal Reserve actually mattering again, Of course, it never stopped mattering, but it feels like it matters again. Insights from folks like Caleb are going to be very valuable, and we'll have him here every Wednesday that he's available, and no matter what European country he's streaming in from. So we absolutely love it. And we talked a lot about Lux Algo, and you might be sitting there thinking, well, you know what? I want to give this whole trading thing a swing. Or maybe you're thinking, man, I've been trading, but my gains have been plateauing. Level up with Lux Algo. Go ahead and check out the link. It's right here under the trading tool patterns. You can go ahead and get that Lux Algo set up, and that does actually unlock extra benefits in the Investing Bros Discord. So it has everything to gain and nothing to lose by going and checking out the Lux Algo link there in the description of this video as you're subscribing to Caleb on Substack and Twitter. I'm having fun, Tim. Having a lot of fun.
And I'll tell you what, the fun never stops. Maybe it does for you too. But today, right after the show, reminder to all of our members, we will be live in Discord here in just a couple of minutes. So I saw someone say, can Tim Rants just become a consistent segment? I'll tell you what, the majority of the members-only streams are Tim Rants. So you don't want to miss that. Yeah. With that said, though, Caleb, once again, my man, thank you for being on here. It is always a blast. I don't know about the community. And I love the community, and your opinions are always very valid, everybody. I want you to know, though, when it comes to Caleb Friends and Wednesdays, they're my favorite show. So even if we get 1,000 people writing back saying, get this guy off the show, he sucks, it's not going to happen because I love my Caleb Friends and Wednesdays. I hope you guys do as well. Make sure to follow him with those links that T-Shroom pointed out to you guys. Members, we'll see you here in just a couple of minutes. Love every single last one of you guys. See you tomorrow. Adi.
Os.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. T-Shroom's news, got your word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.